funds can be raised for a company. So how can we extend the equity and the debt structure further? Yeah. And practically, I was making a beautiful graph on the whiteboard screeny thingy, and this was behind. So practically today we will check this what is happening exactly in the sector. So if you have to look for the data, let's update our knowledge. So practically this is what we can see here. So founder, private investors, angel investors, venture capital, special purpose acquisition company, so we will define it as well. Public listing, seeding capital, and SVF will be on the menu today. So if you are looking on venture capital investments, then we can see that most of the money is still going into later stage companies. So not into startups or in the early stage companies, but practically we can say that they are looking for big companies to remodel them and to reorient and increase their profitability, because practically since the 80s they are doing this. So yeah, this is just a definition, but
isn't the definition of angel investors that they invest in the beginning?
yes, so you're right. So in the case of angel investors, they are early stage investors. Because also we can say that for them a late stage company would be too big piece to eat. So we can say that yes, so they are focusing on startup, but in the case of venture capital funds, we can say that it can be way more oriented towards traditional and bigger companies. And also there is a special entity, SBIC, which is privately owned, but also they are supported by the federal government to provide venture capital exactly for small businesses. So in this region, in Europe, there are the Jeremy funds who has similar purpose. So they are focusing on SMEs, and also partially they are funded by the European Union, but also to have such a fund, you have to invest also half of the money at least. So that's why we can say that this can operate similarly. And yesterday I talked about venture capital funds, so we can say that this is a long-term investment, and they have majority shares. They are focusing for 5 years lifespan. But what is really important, that they have to operate in the vicinity of the company. So if you need venture capital funds and you don't have venture capital funds in your region, then you have to relocate, necessary to relocate the company if it's possible. So that's why startups are usually spinning up in specific regions and not elsewhere, because this is really important due to the micromanagement what the venture capital firm provides. And then it's necessary to see the SPAC, because we can, yeah, so IPOs are really important, and if you are checking until COVID, they were the most important way of listing a company publicly. Since then, we can say that SPACs became more popular, but also I was able to see in this year some articles which were saying that now this is over. So maybe it was just a temporary thing because it became harder and harder to form successful SPAC strategies. So maybe what we can see here is a bubble, but still it's necessary to talk about. So what is happening here? So SPAC raises capital through initial public offering. So actually it launches itself on the market or lists itself on the market for the purpose of acquiring something which is not publicly listed. And then in this case there is an experienced manager who is trying to form this, but in the case of unsuccessful SPACs, we are able to see that also not just the experience but misbehavior or misconduct of the management was sometimes the reason why these SPACs were failing. So and also we can see that money, 20% of the money is coming right from there. Then public shareholders are providing the remaining part of the money, and also we can say that there is also a warrant which is connected to the shares, so actually you can extend further the applied fund, and then we can see that they have a 2-year time span to identify and to do the merger and then to list the company on the stock market. And what is interesting that it's not just about equity but also debt-based funding. So this is why it's also different from traditional IPOs. And at least the PVC says that there are advantages over the traditional IPO. So first of all, due to the higher trust in case of the experienced management, capital accessibility or availability is provided under more turbulent time periods. Okay, so even under COVID, they were able to grow, and in the first year after COVID, they were able to grow. That's why it will be really interesting to see what happens in this year, because turbulence just started. So, but also we can see that transaction fees can be lower because usually, so public listing is a thing, but the biggest expenditures are always related to the transformation of business processes. So how you can create all your corporate reports, or how you can transform all your reporting structure, culture, and so on to meet with the requirements of a market. Because, okay, if you're a private company, once in a year you have to publish the annual report, and that's all. But for a public listed company, you need quarterly reports. Also, you have to be way more careful with your announcements. You have to provide all the necessary information for the shareholders. So you are not allowed to do such ranting, what is happening in the case of Elon Musk sometimes. So you have to be careful what to speak, but also you have to provide all the information. And also you have to, and the management should avoid insider trading as well. So yeah. So that's why if this thing is managed by a professional entity, okay, IPOs are also managed by professional entities because they are organized by investment banks. Okay. Let's avoid this problem. And so in this case, we can see that at least the timeline of the listing will be way shorter because the SPAC is already on the market. And yeah, so the auditing, accounting, and reporting registration requirements can be provide a challenge. And usually what we can see that within 3 or 5 months, it must be successful, or they are avoiding the deal. So this is a SPAC timeline. They are forming it, then they are looking for targets, doing the negotiations, and then if it's approved, then practically they are doing the acquisition. So we can see that they have some time, but after that, once it's approved, then within 5 months it's necessary to do the job. And if we are focusing on public listing, then this is the working paper what I referred yesterday. So this is the National Bureau of Economic Research in the US, and this is what we can see. So the most of the negative feature of public listing is the disclosure requirements, the attention paid on the firm and management, and the fixed and variable cost of listing. So still you have to pay to maintain the shares on the market, and practically when Musk was asked that is it possible to publicly list SpaceX on the stock market, he was saying no, because right now as a public company still they are able to attract investors, and also he don't want to be so strict in the case of communication. So we can see that SpaceX communicates way more openly than what is happening, or way more directly what is happening in the case of Tesla. Then okay, you have also an investors day, but it's an enormous amount of information what is coming up. Usually even about stuff which is under planning or in construction, or prototypes and so on. So for me, as an enthusiast, it's much better that they are not publicly listed, but also it is right now not their objective. Obviously, public listing is an exit strategy for earlier investors. So maybe the founder or the CEO says that, oh, we don't want to be publicly listed, but if you are backed with a venture capital fund who have to exit within 5 years, for them, if they are not able to find another investor or a company to acquire this, so there is no M&A at the end of the process, then IPO should be done. So in this case, this is not an option if you have a big investor who can force the management to do this. And also, we can see that in the case of manufacturing, this is highly popular to do IPO, because this is how they can collect funds to scale up the operations. So if we are able to see that they are collecting or issuing new shares but not scaling up the output, then this is the case when they are just dumping the market with newer and newer shares. So this is the less ethical scenario what we can see on the market. And yeah, so this is how public listing was changing in past, but let's focus on seeding capital, because for seeding, so for us, at least for the specific industry in the case study, seeding capital is highly special, because this is when you get funding, but not as an equity. So NASA never became an owner of any SpaceX shares or orbital, or later on orbital ATK, nowadays Northrop Grumman shares. They were just providing funding for a specific product, for the development of the product, and also after that they provided a market for the product. So they were providing a contract with a predefined number of orders for a predefined number of capabilities. So this is providing safety for the market participant, and also to be part of this, you had to have private funding in this case. So this is what we can see here, that okay, you can get this 50% of capital from the NASA, which is not that much. So it was 800 million US dollars. So that was the initial program. In the case of the cost program, to be allowed to step in the program, but half of the investment had to come from private entities. So that's why rocket plane or rocket Danklister or something like this was kicked out from this program. And after that, we can see that once you were able to reach orbit and reach the International Space Station, then you were allowed to get the final contracts. So we can see that at the beginning they were the contract for 12 launches, then it was extended by 6 more, and after that they were selected in the second CRS2 contract. We can say that yes, on paper it started, or the selection procedure started on 2016, but practically the first flight was happening only in 19. So we can say that catching up with reality was taking a lot of time because we can see that the first CRS was taking a lot, because at the first year they were able to fly only once a year. So it was really hard. It was so many scrubs. They were not able to launch for different technical reasons. Now it's a regular process. So they are doing cargo with twice a year, people twice a year as well. So it's at least 4 times it's in a year, and also there are the private missions. So but it's really good, because if you can say to a bank that okay, I would like to have a loan for funding, and then you can say that okay, my market is partially secured, because I got capital, at least half of my capital is coming from a government agency, and also my market is stabilized because I have such amount of money for this amount of launches, which can be extended further with optional contracts. So obviously for the banker it will be way less riskier than financing without this. So that's the reason why we have at least this company, because Orbital Science and Northrop Grumman is coming from the defense sector. So for them it's a nice way to get some money, but this is not their main objective. Yeah. And also yesterday I was talking about the sovereign wealth funds, and this is what we can see here, that they acquired Virgin Galactic 30% in 2010, so it was a 100 million US dollar deal, and still we can say that even after the IPO, still some of it left. So and if we are checking Virgin Galactic share prices, we can see that this was not the greatest investment for them. So we can say that okay, this investment company is one thing, but also still we can find one bank from Abu Dhabi, another bank from Abu Dhabi, ÖMV. Okay, ÖMV is interesting. And this is Aldar Properties. This is also a sovereign wealth fund. So okay, Emirates. So we can see that this is really interesting. I don't know what is this Global Foundries. I did not check it, but we can see that. Yeah, this is an opportunity. In the case of Rocket Lab, we can find different owners, but what we can see here, Lockheed Martin. So Lockheed Martin was stepping into this business because somehow they were left out all this. So Boeing was able to get the Starliner capsule, which is operating completely badly. So still it's nothing about flying with people, but at least now they were able to reach the International Space Station and come back without any issues. But Lockheed was, they are just part of the SLS program, and they are building the Orion capsule. So okay, we can say that in traditional cost-based funding, they are there. But this is their first step into the new space business, that they are funding Rocket Lab. So maybe they are buying higher or bigger share if they can see that this is a viable business. But right now we can say that okay, they are in here, and also there is some kind of cooperation at the level of management, or at least the level of technologies between Lockheed Martin and Rocket Lab, which is not disclosed, but there are always rumors and mentionings. So we can see that there is an investment advisory firm, there is a venture capital firm, another venture capital firm, deal management. Okay. Not about hunting, it's about rockets. Okay, this is Peter Beck, so this is the founder. He's a really nice guy from New Zealand. And there is this future fund investment company number 5. So this is a financial vehicle. This is not a mutual fund, but this is something which is pooling up capital from investors, private investors. There is another private equity firm. There is a business angel. This Matthew Oko has many different investments, so that's why we can say that he's not related to Rocket Lab. This is one of his investments. And
But the founder is kind of a minority.
yes, now he's in minority share, but still we can say that yes, here he's quite significant among the. Yeah, but this is usually the case that once funding is acquired and collected, okay, his share could only increase if share prices are going up and he can use up or initiate his stock options. So in this case, there is a chance, but otherwise, it's really hard to increase at this level the share size. And if you are checking SpaceX, then we can see founders found. Okay, they were not doing so many different steps, and during the naming, but we can see that it's 20 million US dollars and convertible preferred stock. What is this? So I think maybe it can be converted to regular stock, but it's not convertible bond. So at least in the case of preferred stock, it's better than having left out, but okay. So, okay, then we can see, and it's 2008, this is the cornerstone because this is when the entire CRS-1 program was launched, and this is when they got the contract. So after that, this became less riskier for external investor. So until this, they were living what Elon Musk had from the selling of his PayPal shares. And also we can see that Draper Fisher, okay, Jorvetson International something, then we can see that this is VC equity, but still it's a small amount of money. Then they started to increase, so we can see that carefully they are acquiring higher and higher shares, some million here, some million there. So possibly what we can see here that SpaceX was reaching different milestones, and that's why they were acquiring additional funding. So possibly because nothing is disclosed here, just we can see that money is flowing in. Also, undisclosed firms are appearing here. It was classified as VC equity, so we can say that. Okay, this is venture capital fund, and again Draper is coming back with additional convertible preferred stock, and Fidelity Investment Fund. So Fidelity has usually, so they are managing mostly pension funds, or they are also providing fund management services for mutual funds. So we can see that this is a much more mainstream company that appears here, but still we are in the 10 million US dollar scale. After 2017, so in 2017 they were able to land finally on the barge on the sea. At first it was on the land, then on the sea, and they were able to relaunch it again. So this is when the big story started. So until this point, it was just a dream that, oh, we can reuse first stages. After struggling 1.5 decades, then the big money starts to flow in. So we can see that someone provided nearly $500 million. Then there is an additional 200 million. from another venture capital investor, then undisclosed firms with a lot of money, and we can see common stock and preferred shares, and that's my favorite, Ontario's Teacher Pension Plan Board, with such amount of money. So 360 million US dollar, just here is it, there you are. And
can it be part of an ETF or is it separate?
no. So the SpaceX cannot be part of the ETF because they are not listed.
Oh yeah.
So they cannot be. I think they cannot be part of any index because it would be really hard. So so we will check the Ontario Teacher Fund because it's funny later on. Then we can see that still there are small investors. So cute that 5 million US dollars. And after that we can see that this Lauder Partners, it's nearly $1 billion, was flowing in. Legendary Ventures, I don't know why, but it was zero. So it was not that legendary, maybe. Uh, and still we can see that now they are acquiring a lot of funding, but in this year there was only one. One. Okay, so we can see that this. Sorry, there were two cases when funding was provided. 1.7 billion US dollars. What we can know. It's again valor equity and someone who is not disclosed. And there is another. So still venture capital funds are lurking around SpaceX. So we can see that this list can be extended further. And practically why I was appearing in the entire sector. So this was my. Originally, I had an argument on the internet that SpaceX can be funded only, or new space can be funded only because interest rates are so low that it's really cheap to get funding. And what we can see here, that I lost the bet completely because they don't have a really deep debt structure. So we can see that okay, they are using some kind of loans, but equity kind of funding is way more dominant than that. So let's check that. Is this different? Debt and credit. Yeah. Just not all the menus are active here. Yeah, so right now 2 loans are active. So we can, that's all the information what is available, I think. This is a new, this is a variable interest loan. Cool. And we can see that Libor plus 4.25%. So this is not that much. In the case of this loan, and there is nothing about this one. So yeah. Okay, I should be happy with. At least we had such a data, but that's all about the debt. I think debt structure is the same, or it's not even active. Yeah. Yeah, there is nothing at all. So, and also they don't have ESG. Oh, now they have. Oh, So we can see that in previous years they had nothing at all, but okay, so some kind of scoring is in progress, but at the end of the day they should have some numbers here. So statement view. Oh, no, not peer review. Sorry. So nothing at all. Okay, and let's go back to the slides. Yeah, that's all. So right now I would like to show you. First of all, we should check Ontario teacher pension plan before doing anything. This is a significant thing to see because at least we can, yeah. So if you are a teacher in Canada, especially in Ontario, then you have this pension fund, and we can see that they have a really nice diversified strategy of investment. So technology, 28% or 29%, then industry is 24%, consumer cyclicals another 21%, and financials 11%, and still some healthcare, energy, basic materials, and consumer non-cyclicals. And it's even diversified in the level of geography. Wow, in Zambia they have something. And yeah. But mostly we can see that they are focusing on Canada. So it's 32% is going to Canada, under 26% is going to the United States. So the rest is at least in Mexico they have 6%, but also Senegal 0.7.
Maybe energy.
Yes, so something that still in portfolio. Yes, it's nice to have. So if you are looking on, yeah, so they are still keeping in their portfolio, and they are doing it for 3 years now already. So, but this is categorized only as industrials. So it's really interesting that it's not categorized as aerospace, defense sector, or anything like this. Yeah. So we are able to see this. But now let's see the other story, because unfortunately SpaceX is not listed, but Rocket Lab is listed, so we should check Rocket Lab, and also we will check their share price. So Rocket Lab is really interesting because on one hand this is a company which is located in New Zealand, but they have also operations, at least they will start operations in the United States. So they have a launch pad there, they have a manufacturing facility there, and they will become more and more US located than New Zealand located company. And it's special because you can work only in the US defense sector, so especially rocket building, if you are a US citizen. So it's really tricky to be there and to work there. So Rocket Lab has only this way to work around this situation, because they are existing in both cases. And we can see that country of headquarters, United States of America. Just until today, most of their manufacturing and operation is located in New Zealand. So, it's quite strange, but news. To look for after 2020. November. And here we can see that, yeah, I remember of this failure. So they were able to separate the second stage, but after ignition or so some kind of ignition failure happened because there was an electricity spike, and it created an interference, and then it killed some electronics, and after that it started spinning up, and it's never good when you are doing. Instead of going this way, it was spinning sideways, so that was end of transmission at that time. And also we can check the good news when they tried to capture the first stage with the helicopter. And mostly they were able to fish it because the first stage was coming back with a parachute, and then it was fished out from air with a giant hook with the helicopter, and they were successful. Just after that it started to destabilize the helicopter, so they had to let it fall. But since then they tested the engines, so they can be good for reflying. So let's see that what happens at this day. Okay, so let's load in the data. So loading the data, so it means data equals xls read.
Professor, can you please load the data?
Yeah, sorry. Yes, you're right, sorry. So first of all, I will check it that is this working or not. So do we have missing values? Because of this, Excel is not able to recognize what is a number and what is not a number. Okay, so how is that? So obviously what we would like to do to calculate the logarithmic differential, because after that we can do any kind of data processing with this one. So log data, and we can say that let's focus only on closed prices. So we don't want to focusing on high, low, and other features. Just the last one. So all the rows, and which one is it? 1, 2, 2, 3, 4, 5. Okay, so 4. So only the closing price is analyzed. We don't care about the rest. Then, after this sophisticated analyze or loading, then we should see. So let's define the time windows. So we can say that we will have a range of 30 days. I think that if some shock is happening, we can compare 30 days before and 30 days after, and if we can find some discrepancy, then they are launching every second month, so that's why it's not interfering with businesses. It's not SpaceX which launches every, I don't know, week now, or twice in a week, so it depends. But I always get the notifications that there is another launch. In the past I was sitting there always. Nowadays it's meh. Let's check Twitter. Okay, it landed. Okay, cool. And let's define the fail date and let's define the land date. And just let's define an ordinary launch date when they were just flying without any extra features. Okay, so the fail will be this day. So this is 21 May 15. May 15. Yeah, obviously markets were closed on that day, so we have to say that it will be 117. Throw and then when they try to capture it, May 2nd. Hey, this is one of my friend's birthday. Cool. And, May the 2nd. 22. So this is 359. And just let's get an ordinary launch date without any features. So that's some nice NROL defense contract. Yeah, their naming is always funny. Yeah, and it's always related to the company which launches it. So they have there and back again. This is a reference on the Hobbit or Lord of the Rings. Okay, it's coming or launched from New Zealand, so I can understand it. July 13. Okay, 388. So we have the time windows. Yes. It's just a random launch. Just I wanted to see that what is happening when they are launching something and then it's successful. So this is just to test that is there any reaction from the market, or because I think it would be nice that they were able to make some money, so the market should react at least somehow. And now it's necessary to see that, okay, how can we compare returns? So the easiest way is to check it with a two-sided t-test. Because if they are significant, the before and after data is significant, then the two-sided t-test will define that, okay, there was something. So t-test 2. Yes, 2 sample t-test. This is what we learned on statistics. What I was pushing. And let's fill the data, so this will be P11. P smaller than 0.05, then it means that we can't difference in the values, so we should say the fail. That fail minus range to until fail. So this is the first part, and the second part where we are comparing stuff, fail till range. So after that we can see that the previous set of data, I should check it, that is this thing running or not. And also first column. Yeah, there are no error messages. So let's see what happens with the... So the p-value is, we can see that, okay, let's say 10%. So we can see that this is still significant-ish. Not great, but not terrible. So the market reacted on the failure of the second stage. And what kind of failure was this? So if we just have to not plot, let's use a bar. It's supposed to be negative, but still. The second is the I cannot say that they reacted immediately, so maybe we should check it with the... Let's calculate the mean of this. So mean before mean after. Is we just have to compare two numbers. Practically what we can see here, the share price were increasing on average. Okay, so there was a significant market reaction, just this is not what we wanted. Here, can we say that at least the standard deviation increased? So they became much more uncertain about pricing. No, standard deviation is completely the same. So no, they are not. Or did it create disturbances? So is there more sudden jumps? So extreme jumps or changes, outliers in the data set. So let's check the kurtosis. We are using all our knowledge from statistics, at least at the level of moments. And the mouse is not doing always what I want. And here you can see something, because kurtosis is supposed to be 3 to say that the amount of extreme changes are the same or fitting well to random changes. And we can say that we are above the randomness, so we have more extreme jumps than it is supposed to be. And after the failure, there is it's even bigger. So we can see that flat tail has become a bit bigger, but this is a really poor evidence. So we can say that market reacted, and of course we could say that, yeah, but the share price change is a nice indicator, but practically the market's uncertainty about pricing is always described by the volatility. Not okay, the return is good thing, but we have to use Gauge models. So it's at the end of the day, Gauge model is always our friend. So let's use one here as well, because in this case we can get good data about the ability of market to price in the share. Epsilon will be red, POQ, everybody will be 1, error type will be something exotic. Let's have a skew T distribution because it will be asymmetric and also fat tailed. So this is the strangest one. And then we got here the HT. Hopefully this will change in time. SQRT square root of HT. It's so nice, it always provides me the variance just maybe once I will write in the code of the Menfei toolbox and putting the square root into the code, and I don't have to do this every second lecture. So we can see that okay, it changes in time. So the Gauge model was not failing. So let's check the same thing. Let's have the second fail, and not the red, but now the. It doesn't matter if we are. So if it's on square root or not on square root, the t-stats will be the same, I think. So let's be lazy. We are doing this just for testing purposes. So this is what we can see, that yes, volatility was changing significantly. So here, this is absolutely clear. So we are even under the 1% confidence interval. So it's a 3-star difference. And if we are going back to the previous test, so let's say that we are focusing on the mean, but not on the red, but the HT. And no, volatility decreased. Okay. The market doesn't care about failure. And also we can see that the kurtosis, so the market became much calmer in the case of the pricing of the asset after they failed. Yeah. So let's see what is happening if they are not failing. So let's have a random test that this is just a launch. And we are changing everything from fail to launch. Fail, 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 fail. Okay. Ctrl F would be much more efficient in this case, but okay. and this is second. And let's remove this. Would like to see. So the p-value significant. Again, something is happening. Just we don't know what, because after the volatility will be smoother again, but it provides more extreme. So if we are changing the return, yeah, share prices were increasing. And what happened when they tried to capture it with the helicopter? Because this would be reusability at the level of Rocket Lab. So according to rumors, that's why they get the funding from the Lockheed Martin. So I just want to control it before it starts to rename anything which is not supposed to be renamed. And let's have the t-test.
Professor, why are there two p-value?
Yeah, the first one is comparing the return, the second one is comparing the variance. So this was the failure, this was the success, and this was the landing. So that's why. So in the case of variance, we can see always there is a significant difference. In the case of the returns, we can see that they were not significantly different. So the market it doesn't matter for them that they are doing something which is successful and innovative and a new thing, and yeah, who cares? So if they are comparing the volatility even increased. If they are checking the return, actual share price is decreased. It's really hard to be an innovative firm nowadays. So we can see that also kurtosis increased a bit. So this is not the case when we can see that, you have one success and it stabilizes the share price. Especially they don't care about it. Okay, let's have the big announcement because still have some minutes. So let's just copy it here. And there was one announcement when Peter Beck was eating his hat because in the past Peter Beck was saying that he don't want to have big rockets and he don't want to have reusable rockets. So he was believing completely that printing out a rocket which is expandable in 3D with carbon fiber, it will be efficient enough. And after that, he realized that no, because SpaceX is eating up their market, so that's why he lost his bet. And on live camera, he was eating at least part of the hat. So bless you. And also at the same time, after eating the hat, they announced that they have this bigger rocket, which will have the same capability to launch mass on orbit like the Falcon 9. Just you can see that. Yeah, so this is oddly shaped structure, but you can recover the entire first stage, and the fairing is built in. So it's like in an old James Bond movie when there were this satellite or space capsule eating evil space capsule. So this is the same thing. So this launch stuff to 100 kilometers, then opens its mouth, kicks out the second stage, and then it lands propulsively. So a Falcon 9 with a mouth. And from carbon fiber because it's sexy. So this was announced on March uh, last year. So let's see that. Can we find anything here because that was a new thing. Okay, then let's check again. Maybe now the market is still return was not reacting on it, but volatility was significantly different. So at least we got something. Share price is decreased. Oh my. Okay, it can be maybe the reason because yeah. So it happened also with other companies when they announced that they would like to extend their operations, but it means that they have to issue more shares. So the shareholders start to be unhappy because it will increase the amount of publicly traded shares. So if they are not purchasing from the new shares as well, then their ownership will be reduced relatively. So it can be a reasonable reaction. And if we are checking the mean of volatility, yeah, volatility increased. Okay, in this case it's reasonable because now you have to revalue the entire company due to the new business ideas. So this is one thing. I don't know Capstone mission. Can we include this? Because also they launched a small satellite around the moon from NASA funding. So can we say that does it have any influence? Because at least they were in national news, so it's supposed to have something. So this was partially their inauguration of their own satellite building capability. So it was not just launching stuff, but it was also building the vehicle to be launched. So 2022, June. Okay, so we got the capstone. Still, after that, there were some troubles with the vehicle, but still it's operating healthily. Just there were some uncontrolled tumbling here and there. share prices reacted on it, and also the volatility, so it has significant influence. And the favorable, finally we got something which was improving the company. So Capstone had a good press. And volatility was also decreasing. So sometimes we can see that success is appreciated by market, but